Imagine this, okay? I want you to imagine this. Get your head together so that we can imagine together about what happened. So you go to your mailbox, and of course you see this dreaded envelope because it says IRS on it. And I'm like, oh, what the heck? Why do I have this thing with the, from the IRS? And what is this crap all about? You go inside and you open it up and you almost faint in the chair. Okay, at least I was in a chair. God help me if I had been standing up, because the letter said that there was something wrong, and that we owed, my wife and I owed something north of $20,000 in back taxes because of denied deductions and uh, other lack of documentation of expenditures and all of this. And so, of course, my shock and disappointment was nothing compared when my wife came home and I had to give her that letter about, well, look, what the heck is this? And we're like, no, this can't be true. We use a tax guy who is known throughout the entire area where we live. He has a reputation. Is He's not trying to get his clients with audits. Okay. So just imagine, though, you get a letter that you got to write a check for north of $20,000. And when I say north, I mean it's way north. It's above the Arctic line or the Arctic Circle, whatever the hell that is. That's how north that was. And so what do we do? We were like, what the hell? We ended up going back. We didn't get satisfaction from the professional, and in order to get this fixed, we had to hire another tax professional from another state that worked a lot in the state of Maryland and could take this to, at the time, they don't have these anymore, but at the time, she could go directly into the IRS and meet with one of the folk, and we were out of it. So she represented us at a significant amount of money. It was a significant fee that we had to pay to get this taken care of. And she actually sat down with the IRS and explained certain items, some things we won, some things we lost. Yeah, we had to write a check, but it was nowhere near that north of $20,000, that Arctic Circle north. It was nowhere near that. Okay. So the thing is, how do you become audit proof? This should never have happened. Okay. I never ever wanted to talk to the guy again. And I never have ever talked to the guy or seen him again. But how do you audit proof? How can you do that? Okay. The first way to really do it is, what I do with clients is say, look, we're going to review your return for the last 2 years. Let's look to see, this is especially if they're a new client, and particularly if they're a new client. So we look at, what did you do 2 years ago? And we look at the return, and I look at stuff to see if, does this make sense? Is this logical? Do they really have children? You all will be shocked the major compliance issues around having a child and taking child tax credit or other child-based credits in the system. It's crazy what we have to do to meet the IRS compliance standards. So, I look at that, I say, yeah, they did have kids. Okay, but they've got this one, they say, is their niece, and the niece lives with them. Is the proper form filed? All of that. It's nowadays, it's all about making sure that you have support for everything that's on that return. And once the taxpayer signs that, that's their tax file. At the same time, they can come back on the tax preparer, and if it was, done in error, there's potential fines that tax preparer might be subject to. And depending on what state they're in, if there's a complaint filed against the state board of tax preparers, as they have in Maryland, they will actually take action against you, and your name will be published on this wonderful list of tax preparers who were fined or penalized for basically doing a lousy job. Okay. And no tax professional wants to be there. So you look at prior year returns to see if everything is consistent, whether or not it makes sense. Is it going the way that we need to go? And the next part, what I've already talked about in a previous discussion, you have to have tax planning. Okay. You have to, the reason you have tax planning, because as you identify additional deductions and additional sources of income, that gives you the ability to make sure that what you're looking at is correct and that is documented properly. Okay. The worst thing that can happen is you do not declare income on your tax return, because guess what? The IRS is matching up all of the 1099 NECs that are filed with the Social Security number on your tax return. And if they don't see that on your return, you're going to get a letter from them saying that you have not properly filed what the income is for your C Corp, LLC, whatever. You do not want to be in a situation again, and I can say this 20 times from tomorrow, and people won't get it. You do not want to not declare income. There are going to be huge numbers of tax returns reviewed at the IRS because folk are using things such as Cash App uh, and other uh, money transfer items for business and are not declaring that income. Starting in another year, the companies that actually process those payments are going to issue 1099s to you. So now you have to make sure that you're compliant in reporting that business income. As a note, if you're using Zelle, Zelle will not be required to do that. I'm just pointing that out. So if you know that you're going to have additional income and you have additional deductions, that's where you do the tax plan so that you can make sure that what you're putting on the return is correct and makes sense and is not going to flag for an audit. I really have to stress now what's happening at the IRS. The IRS now is in process of being able to manage huge amount of data in a way that they were never able to before. So if you think that you're doing slick and it's going to slip by, it's less likely to do that in the future. Okay, because they can write algorithms, and a lot of times when I look at someone's return, I have a database that I use that I kind of cobbled together that compares what you have with your situation with what someone else has in their similar situation to see how far you're off from there. And if you have any crazy variances, especially on income or crazy variances in expenditures, we make sure that we document that to the best extent possible so that you're not going to be flagged for a potential audit or even just a telephone review. What's the last thing that you can do? A lot of independent tax professionals now offer audit protection, and I actually do kind of recommend that. The fee can be sometimes in the $50 range, or it could be higher. But what that does is that gives you some added protection that if you do have an audit and something is really being questioned that makes no sense to you or the original tax professional, it will allow you the leeway to hire an attorney, a tax attorney, of course, or to work with an enrolled agent that can represent you in front of the IRS to kind of deal with the situation before anything goes bad. And when I say anything goes bad, and that's because sometimes people will ignore the situation because they fear what's going to happen. And that's the worst thing that can happen, is that you ignore that situation. So take a look, ask your tax professional, are you selling audit protection? I'm sure they are, and buy it. It's worth it. It's a fair price, and it gives you an added level of protection if you have to go into an audit situation that you as a consumer are not prepared for. And that's part of my mantra again: you cannot do these things yourself. It's not worth it.